online. Yeah, you didn't check the YouTube. So you are now, market is here. Oh, it's selling. Now you see this structure. What are you supposed to do? What are you looking for? What do you want to, what is going to be your trading idea? Are you buy or you are going to sell? It's a sell trend. It's bearish. Number one, bearish. Rule. Look for sell. Bearish. The rule is look for sell. So where am I going to sell? I am looking for a pullback from this point, because the rule is rule 2. No sell at lower low. Lower low, lower low, lower low, lower low. So this is lower low. So what am I looking for? I'm looking for the price to pull back. Now this is where the real issue is. Where to enter. Now remember, the rule is that as the price is going back, the rule is that it must not be higher than this. Once it is higher than this, it has violated this trend. So our entry will be from here to somewhere here. So that I listen, because area you are very, very critical. So our entry is anywhere from here up to the lower high. Why? Because okay.
So that if it changes that trend and hit your stop loss, or if not,
that the stop loss must be above lower high. Entry should be somewhere here. And now there are some traders, they will wait for price to retest the previous lower high. But in most cases, it doesn't get there. So there are some traders, they believe that out of 5 trend, 1 will go there to retest. But me, I will not subscribe to that rule. Rather, I will prefer to use my moving average. You are there, sir? Yes. You are there, sir? This is where I okay.
we have to wait for this move first.
Yes. Okay. You have to wait for this move. You will see green candlestick coming. Now, what will happen is that because the price is collapsing, the price will be below the moving averages. The one I mentioned yesterday, the moving average. So you will see price. Let me do it correctly. We'll go to the chart and see something like that. We'll see price moving below the moving average. The moving average will be somewhere here. So as the price is going retracing, the moment it gets around the moving average, you begin to use the moving average as resistance. In a bearish situation, rejection above is resistance. In a bullish situation, rejection below is support. Correct. So the moment you get to the moving average, the next thing is you want to wait for candlestick confirmation, or you enter straight, aggressive or conservative. So if you are on 15 minutes, looking at this on 15 minutes, the best thing to do is now switch to 5 minutes for that candlestick confirmation. If the next 5 minutes candlestick becomes a bearish candlestick, red, put your sell, enter sell, then put your stop loss above the lower high. Then watch price drop. Or aggressively, the moment it touches that moving average, boom, put your stop loss. The two works. Conservative is just making you to be more extra careful. But I have discovered that at the end of the day, whether you are conservative or aggressive, it's still the same outcome. But if you are more aggressive, you get more. Because if trade is going to violate that setup, it can still do that conservative confirmation you are waiting for and still violate it. It can still do that bearish candlestick confirmation and yet violate it, reverses and return. That's why Justin said doesn't wait for candlestick confirmation. He sets pending order. Let me call someone. Tell him to bring water for me so I can give him. Is there any, if there's any confusion here, let me explain. Let me come again with the explanation.
From the moving average, if it hit the moving average and it move back,
Bring water. That area. If it touches the moving average as resistance, the expectation is that it should begin to drop.
That's another
Yes, for another sell for us to enter the sell, because we want to sell.
Enter up there, this 4 cents. Enter down here.
Not entering down here.
No, not there. As in, this moving average.
That candlestick, when it touches the candlestick, the moving average, it will start selling. It will start showing red candlesticks. So now go to a lower time frame. Give him. Simon, sir. It will help you. Let me give him some water. Yeah. If you go to a lower time frame, you will quickly see a bearish candlestick that will form. Let's say you were on 15 minutes doing this, and it's already at moving average. In 5 minutes, you will likely see a bearish candlestick, either an elephant bar, a pin bar, a bearish candlestick that is showing you that we are ready to continue with the downward trend. So that's immediately after that closing of that 5 minute candlestick, you can enter. That's a conservative entry. But aggressive entry is the moment it touches the moving average, You are hitting the sell right from there. You are not waiting for candlestick confirmation. Not definitely, most likely. Most likely. The worst thing that will happen is that it can now break the moving average, go to this lower high here, touch it, and then start falling down. So what will happen is that by the time it starts going that up, you will be on negative for a few minutes. But the moment it crosses here, as long as this trend is valid, it will start collapsing from there, then it enter profits. The worst scenario is that it will break it, hit your stop loss, and then that trade is over. You move to the next one. The worst of the worst scenario is that it will do liquidity grab, go and stop people out, and then drop again and start going. You will now re-enter. So by that time, you will now use candlestick, because that rejection, that liquidity grab will always appear like this. This thing demands patience. That liquidity grab will appear like this. It will appear like this. This is the candlestick. You know, this is the lower high. It will break it and then start rejecting immediately to form wick. And then the candlestick will now close back into that sell trend. This will be the candlestick. Do you understand what happened here? It did as if it broke it to violate that trend, that trend. But later now reversed. That same candlestick that broke it, later now reversed and closed below it. Now what happened was that there were some people who put stop loss here. Market makers move the market to go and stop them out so that they can use their money for liquidity. So those people's setup was correct, but manipulation took them out. So if you now you are a victim of the same, you will now re-enter from here. Entry, re-entry. So it could be a re-entry for you or an entry for somebody else like gospel, because this is own style. He will always want to wait for price. He will always be looking for a setup where price will do a fake breakout, liquidity sweep, and the price will close back. He will now enter here. But for somebody like us who don't want liquidity sweep, we enter first. If he kick us out, we re-enter. Omi dànù, kíní kan ò ṣe kíní kan. Agbe òfò, omi ló dànù. Bẹ́ẹ̀ni, bẹ́ẹ̀ni. And then we keep going. TP, take profits. If you go far, you come sweet. So ideally, what we do here is that once it gets to this point, take some profits. All right. Why? Because you see, trading is very funny. It can get to this point now and do equal low and then take off from here. And not continue with the lower put there. That's why we usually have different TP. TP1, TP2. So TP1 will be here. Once it takes this one and it goes further, TP2 will be somewhere there. We'll use previous charts to know where you put your TP2. And on and on. But these days, I started doing something that I recently now. What I do is that I use moving average to follow my trade. So I will keep my stop loss behind the moving average. As the moving average is moving with the price, my stop loss is following it. The stop loss will have been on profit. So as long as it will go, I will be following it. So instead of having a TP, I leave it open. That one is not for now. That one is not at this level. That one is later. No, is even an opportunity that I want to take as much as this market can provide. If we keep moving, I keep moving with it. There is, yes, they call it trailing stop. Trailing stop means that as the price is going, that stop is going with it, but it's in profit until it closes it, until it touches it. Then it closes the trade for me. If it keeps going, it keeps going with it. No, it's not for this level. Yes, sir, it's not for this level. Later on, you will by the time you understand how those things work. So that is how we do our setup. So now, this is where I'm going. It's not easy to spend 4 days, come and learn Forex. At the end of the day, it's not easy. Yeah. And what we are learning now is not even enough still. But at least, yeah, it's a foundation. So now, this is another thing you now need to pay attention to. Let's say you come into the market. You now see something like this. You know, if you look at what is on the board now, let's see up to this level. This one has not appeared. Lower high, lower low, lower high, lower low, lower high, lower low. Okay, now let's look at the board. You know, ideally, when you have lower low, lower high, lower low, lower high, you are supposed to have. This was when you enter the market. You saw you opened the charts. You now see something like this. Already, it's telling you that you cannot enter sell right now because this low was supposed to be lower, and yet it's not getting there, and the green candlestick is already forming. So what are you going to do? Please, sir, explain what you are supposed to do in this scenario. This is current price now. Price is currently here. What are we going to do? I want to enter the market. Yes, sir. Lower low. Samuel.
It's just like what you just said now. You know,
Please let me attend to him. Yes, sir. Welcome, sir.
it's not like the one we just did, but that you can enter from here and you put your stop loss above that lower high. Now, if at the end of the day it breaks that lower high, you know, and it back, maybe another another red candle now form and facing back, then we now have our we now re-enter. When we re-enter from under the new candle forming, I mean, I don't know whether you understand.
Yes, sir. I'm following, sir.
So then we re-enter when we have we put our take profit down here. That may be TP1 in case it goes further. That is it not like that one? That we just
No. Sir, what do you think is going on here?
or you have to wait until that comes down or it goes above that lower.
Now, if you look at what is here now, this is lower low, lower high. Lower low, lower high. Lower low, lower high. You see this low that is coming, it was supposed to be lower than this. That is when you will now be looking for, if it went lower, that means it's still valid. That is when you will be looking for a sell at lower high around this area. But what I showed us now is quite different. It didn't go lower than the previous low. Rather, it got here and started doing this. So yes, in this case, you will have to wait.
What are the possible?
Yeah, these are the possible things. These are the possible things it could happen. Number one, it could retest this lower high because that's a key zone. It's a key level. It could retest this zone and fall back. Or it breaks it and then change direction. The moment it breaks it, you are not entering yet. You are waiting for one more confirmation. Because now it has broken the lower high to form a higher high. So you are waiting for one more confirmation. The next confirmation is that it must not be lower than this low. It must not go lower than this.
If it didn't go lower, you know that it was upward trend.
Exactly. So because this is another area of interest, reference points. So once it gets here, your patients will be many here. Yeah, because you need to observe that structure very well. So when it breaks this level, it's already telling you that I'm no more interested in that cell. This cell. It is either going to consolidate or start going higher. So if it's going to go higher, this is what it's going to do. That's why patience will be very, very important here. It doesn't go below this, then it goes up. You are not even entering here. Your entry is here. Until this has been taken out as well. Do we understand now? Yes. It broke this to tell you that I have violated this. It didn't break this to tell you that there is a change of character, change of structure completely. But now, to confirm the uptrend, it has to break this high to say that the current high must be higher than the previous high. Which was this high? This is the new high. And you cannot buy at higher high. You have to wait for this pullback. And then you use your moving average, area of interest, let's say area of mitigation, just like I show us. Area where there's a reaction and so on. Some people call it fair value gap, all kinds of name, or that block, minor, that block, major, that block, or that block inside that block. All those things does not matter to you. Just be able to mark those areas where there were reactions. Just like we saw yesterday. Then, with your moving average, once it bounces on the moving average or any of those areas of interest, that's a support. You find your entry. Your stop loss should be below the previous low. Profit. That's what trading be. And you will see these things reoccurring on a lower time frame. If you are on a higher time frame, you have to wait much more longer. Much more longer. But if you want to go in, go out like 2 to 3 times a day, 4 times a day, just go in there. So you see a lot of this in lower time frame. You only use higher time frame to have a bias. And that bias is today, I want to go long. Today, I want to go short. Long means buy. Short means sell. So if you open your chart, you look at daily, what happened yesterday? You are looking at yesterday's candlestick. Yeah, what happened yesterday? Okay, this candlestick was an elephant bar. Okay, today, I should be looking for a buy. So you go to 4 hours, look at the prevailing trend. Oh, there was serious uptrend. Okay, I'm waiting for correction. For example, we have been waiting for correction on gold. And it's been doing some minor correction, but not heavy ones. So that correction on a smaller time frame is a short sell trend. So you avoid those trends because of your bias. Bias is that you are looking for buy because on a higher time frame you saw buy. So when you now say short sell trend on the lower time frame, wait. Or you just flow with the trend, but just know that it is a short-term trend. It's not going to last. Before you move. So this is how it is. Now, if this doesn't happen, that's why that patience is very important. If this doesn't happen, what is going to happen here is that it will start consolidating. You can't tell the market what will happen. Your own is to respond based on what is happening. So it does the lower high, and then it didn't go high, lower. Then the next one, it broke. All right? Remember, we are still supposed to wait for another break of this level before we find our entry. So exactly. So because you can decide to now start doing like this, like this, like this, like this, like this, like this, like this. By the time you see this, just run away. But if you still want to trade, then start looking for the sell, buy. So when it gets here, because of this rejection happening, you can see 2 or 3. Maybe by the 4th time you are trying it is that you have rested, or you want to try again. Maybe that one will now kick you out. You will now finally rest. You know, some of us, it is when trade hits stop loss that we used to eventually rest. If not, we want to keep going until night comes. So you try the first time, you succeed. You try the second time, you succeed. You try the fourth time, I not succeed though. So when that one stop you out, say don't do. God don't tell you, say don't do. So you buy here, it goes up. You sell here, it goes down. You can do it straight down. Or it will do some shakara, go. Until one day, breaks higher, retest, then continue higher. The market structure is everything about trading. Any issue? Oh, okay. I don't know. Come and fix it. Call someone to come and fix his board. Call him to come and fix his board. So market structure is everything. Everything. Market structure is everything. That's why you need to sit down with the 1 hour, yes sir, 1 hour, 2 hours every day. Sit down with the market, see how it's behaving. It is the same across all assets. Across all assets, it does the same thing. The same thing. Pattern may only be different. Timing may only be different. Volatility may be different. But it does the same thing across. So do we understand that now? Very well. If you can understand this, then with the correct trading psychology and risk management, you are good to go. With 40% trading ability, you will be making decent profits, no matter how small. So let's quickly talk about trading psychology. Quickly show me charts. Let me show them what happened. What we just explained now is it happened on good. Just now. Show me the screen. Okay, now look at what we explained. Make it bigger. Then now look at this sell trend that happened. Lower low, lower high, lower low, lower high. All right. Somewhere here we have found our somewhere in that area we have found our entry. He sold, but see where he went to bounce. The previous lower low. He touched it and bounce up. Use it as equal low. That is why your TP1 must always be at the previous low. If you are selling, I had a trade that I sold. Where I put my TP was a bit far away from that TP1. And it didn't look at it. I sold from here. He came, see my TP. He didn't touch it and he went back. So all the money I was supposed to make, around 800, I couldn't get it. It went back. It touched on the previous low and went up. So all those points, areas of rejection, they are key areas. You need to touch my TP. Just a little. And I miss that something there. So it will also happen in trading while you are trading. There will be moments you miss. Yeah. Painful one. No. Yeah, if I did there for close arm, or if I don't close arm, you see profit of $1,000 go back to zero. Like it will happen. It's part of the journey. Now this one now, you don't go for my stop loss. So it's part of it. You must understand that losses are part of trading. Yes. So when daddy said my face is looking brighter today, no be say because I sleep well. Now because I don't make profits more. I recover from the I recover from the yesterday brouhaha of the market. My wife knows when the market didn't go well for me. When she start talking to me and she see the feeling, she see the countenance, she say, oh, don't worry, I understand. It is you try another day. So you must be able to accept losses as part of trading. So the beauty of it is that if you can follow these systems, your profit will be far weighing than the. Let me sign into my Xness account. That my social trading, the one I showed you on Monday. Was it Monday or Tuesday? That was at 500%. 500% Tuesday. 500% profit. Let's look at it. So now within this trade that I want to show you now, there have been dark moments. Oh, dark moment. That means moments where I place a trade, the trade didn't go well. And yet, let us look at the summary. Come to copy trading. Scroll down. I started this account with $199. I've withdrawn more than $600. Okay. My strategies. Calm down. Okay, view details. Scroll down. Scroll down. Look at the accounts. The returns is now 1,075%. But look at the charts. This down one was loss. So then I went flat. Went up. Started coming down. I told you my style. Once I make one loss, I didn't rest. I will have like 3 to 4 back to back. Look at it. But look at from here when my brain resets. We went back and we are at 1,075%. On Tuesday, it was 500%. The account started with 199. We have withdrawn 600 and something. Now the balance is sitting at 686. This is just profits. Capital has been taken in plus some profits. One off. This one now that trading is going on it is different from this one. We have different accounts for different purposes. There's aggressive accounts. There is aggressive trading. There's conservative accounts where you just pick it slowly. That one now that one they use the run major projects. The aggressive account now they use for daily bread. So that one we have already signed our mind. If it goes, it goes. So we go hard on it. We go hard with it. Because I'm going to talk about risk management now. That is the In fact, that is the most important. The most, apart from this structure, understanding this structure, what will keep you in the game is risk management. Yes, what will keep you in the game is risk management. If not, you will be a broke Forex trader. Risk management is the most important. So that's how people who are connected to this account now, they are smiling. There was a woman I called from Port Harcourt yesterday. She said she has not withdrawn one dime. I said, no, Mama, don't do that. Oh. And she started when this account started. She has not withdrawn one profit. I said, don't do that. Oh. You saw this drawdown here. I said, don't do that, man. Don't do that, man. At least secure the capital. If she have profit close to this in her account, that's a lot of money. And the copy trading account, the way it does is that it keeps compounding. So the new trade this account will be taking, it will be factoring the entire capital. Yes, into it. Yes. And me, I'm making profit, I'm withdrawing. So so the joy of it is that if there is profit, you have more. But if there is drawdown, you will weep. So I had to tell her, man, take the. She said, okay, I will listen to your advice. Yes, withdraw the profit, withdraw some capital, withdraw the capital, withdraw some profit, enjoy, and know that you are benefited from this project. Whatever happens, you keep enjoying it until whatever happens will happen. But by the grace of God, I'm praying that this account will be preserved till the end of December. So that by December, we'll be surprised, we'll be seeing 1 million%. It can happen. It happens. I've traded for 4 months, no single day loss. 4 months, yes. 4 months, no single day. Monday to Friday, all profit for 4 months. Yet in those days, in those periods, I cannot forget it that losses are still part of the journey. So when it's happening, just know that you have not yet conquered the market. The market has just been in a structure that suits your trading perfectly, that suits your style perfectly. That's what it means. So let's now go to risk management. Trading psychology and risk management. Trading psychology has to do with our behavior towards the market. Our behavior towards the market. These are some of the killers that affect traders. Joe hit it a profit. But you marry me, you forget it and move on. Yeah, anxiety. FOMO, fear of missing out. Greed. It is when I started trading that I know that no matter how spiritual a man is, greed is one of the things that want to take over him. Greed requires another level of anointing to control it. And that anointing is not the anointing to heal the sick. It's a grace. It's a special grace. It's not the anointing to cast out demons that puts greed under control. It's the fruit of the spirit. Very stubborn spirit. Very stubborn spirit. Greed. You have to be very cautious of it. Was it 3 weeks ago? No. It's not this year. It wasn't this year. It's last year. So it's not. It was last year. So we were trading. I was trading, and then I had a drawdown from weekend, Thursday, Friday. So I wanted to recover back from the drawdown. So on the following week, I started recouping back the drawdown Monday, Tuesday, Wednesday, Thursday. When it was Friday, I finally got back the full drawdown with profits early hours of Friday. So my wife said, I hope that is the end of trading for today. I said, sure. No more trading for today. That's all. Say, thank God. Go and rest. When it was towards evening, I look at my chart. I say, they know they miss this kind of setup now. This one, no. Let me just try it and add little to it. That was how I entered that trade. That trade. That trade went against me and I added more because I was saying, no, this is a manipulation. It will come back. So I added more lot size. I added more, thinking that as I add more, it will come back quickly and then give me more profits. Sir, that was how this account took me back to square one. What's the issue here? So even at this level, I'm still putting this under control. You don't kill it once, it doesn't die once. It's every day checking. Because he keeps telling you that you can make more. He keeps telling you that you can make more. And the market is there, truly. And funny enough, if you don't trade it, it will now go your way. The way you say, analyze it, you will now be regretting that you didn't take it. The pain of not taking itself sometimes can be more than you trying it and it hits stop loss. You know, it's laughable, but it's serious. Because when you start trading, it will be you and your accounts. Yes, because time will come where there will be mounting pressures. Some things will come up. You say, I can quickly get this thing now. I can quickly get this thing. Let me enter. The moment you are putting expectation on any setup, the higher chances is going to fail. Free your mind. Don't promise anybody, and then the promise you want to fulfill it from a trading outcome. Yes, sir. You will disappoint the person. Yes, pressure. This thing doesn't need pressure. It doesn't need it. Anxiety. At all. It doesn't need it at all. You have to free your mind. That's why I always advise anyone who is coming to copy trade. I will tell them, put money you can afford. And when I mean afford, means afford to lose. If you lose it, it won't pain you. If the pain is something you can easily forgo, it's something that you can think that, okay, what if I misplace this money? Or what if an emergency arrives and then this money has to go with it? So that there will be no stress, there will be no pressure. That's the starting point. If not, it will cloud your clarity. And when there is no clarity, frustration is the end. Yes, frustration. So these are the enemies. No matter how skilled you are with the analysis, these are the enemies. Anxiety, fear of missing out. This fear of missing out is that you see a setup, you want to rush into it and say, if I don't catch it now, I will miss it. It will go. You will miss some trade by 1 pip, 2 pip, just like what happened now. That take profit. Just very close. Now look at where the TP is. Look at where price take back reverse from. And now it's close to my stop loss. It's about to hit my stop loss. So these are some of the things. Fear of missing out. If I don't enter this trade now, this trade will go and leave me alone. Exactly. So you have to be able to control. Discipline is the key. Yes, discipline is the key. Once it leaves, you leave it. Another one will come. It's a structure that never ends. It will come back to give you another one. Yeah, it's the most important. This is 85%. What we have been learning from Monday till now is 15. This is 85. Then the greed aspect. Once you have taken enough, rest. Why? Because while you are doing analysis throughout the day, within the day, energy is being released. You are getting burned out. The focus reduces. The focus goes down. The intensity, the energy, the drive goes down. So when you were not, for example, I'm wondering why I put my TP there. Because see moving average. So something happened that I didn't see it. Maybe I was on another time frame. Yes. So how much more when you have traded for some time? It will blindfold you. It will reduce how you see. And this thing, once you click buy, you can't undo it. Once you click sell, you can't undo it. Oh Lord, yes, straight. It keeps going, and if you are so lucky, it can go your way. So once you've taken 2-3 trades a day, 2 has given you profit, it's okay. It's easier said, sir. Yeah. It's easier said, oh. Very, very, very tempting. Very, very, very tempting. Yes. It's psychology. Then this is the baba of them all. Risk management. Justin Sen, when he was teaching us, he told us never risk more than 1% per trade. Only that right now I've violated it. I don't do 1% again of your capital per trade. So let's say you have $100. What he's saying is that per trade, don't risk more than $1. 1% of 100 is 1. So that means if your risk-reward ratio is 1:3, so if you are trading, for every trade that succeeds, what you are making is $3. So if I'm using 1% on $199, we can't arrive here. We can't arrive there. So, but you have to come to a point where you can actually manage your trading psychology, such that your risk management, you segmentize it. Like I said, I have account for aggressive trading. I have the one that is purely for risk management. Don't put everything together in one place. And why I have to go aggressive is because this market, just hold the, sometimes you have to just hold the bull by the horn. Yes. Hold the bull by the horn and attack it as it comes. That one opportunity waiting for 2 hours, 3 hours. When it comes, I'm not saying go all in, but go such that when you are coming with testimony. At least I want to be able to, by weekend, take my children for $3 cannot do that. $5 cannot do that. I have a friend in Abuja. This guy, I've not understood how he's doing it. These guys can easily scale 3,000 to 23,000. Yesterday, he scaled 199,000 to, he doubled it. Yes, it's my friend. That is the psychology, the mindsets I don't have yet. And it's because of my mentor. You know, your mentor can determine what happens to you. The guy he's been trading for 13 years. And in 13 years of trading, he has been doing this risk management thing. But do you know what happened? Last 2024 December, he was doing risk management, he was losing money. He had 5 million naira with him. And he went to pray. He said, God, give me breakthrough in this thing. I've been on this thing for 13 years. No tangible breakthrough. His breakthrough was last year. I've been on this thing for 13 years. I need breakthrough. He went to his church. There's a building project going on. So he asked the pastor. They didn't ask him. He asked because they don't even know what he's doing. He asked his pastor. He's telling me this story live because I asked him, tell me this thing. Because he's somebody that don't talk. He's my account manager in Xness. So he said, he asked the pastor that how much will it take to complete this side of the project? The pastor said, Tabari be 5 million. I'm ashamed. He went to pray and said, God, I'm sowing this 5 million naira. Last 5 million naira in my account. That was December 2024. I'm sowing it to this work. Please, let my story change on this thing. That was how he sowed the seed. He said he will just sleep. Somebody will just come and be teaching him what to do on trading. So that was how his trading changed. Last year, he made over $700,000 in 2025. He bought three houses. This is him now. This is him. Owu Sunday. Yes, sir. Not 700 million naira Nigerian money. Oh. Do you mean it's over $1 billion? It's over $1 billion. He said he will sleep and somebody will come and tell him, put this, do this. He said he started seeing revelation. So his own style is exceptional. But when the breakthrough came, it came 1 year. That's how this thing happens. So when when that breakthrough comes, it comes big, huge. He bought 3 properties in Abuja, and he's a simple guy, strong believer. So he's not somebody that will even be spending and lavishing money anyhow. Who will ever? He will easily take his family. He will leave his house. He will easily take his family to Transcorp Hilton. Spend a whole week there in Transcorp Hilton. They are tired of house. Yeah. Yes. 700,000 naira per night or 1 million naira per night. Now, of course, that's Forex money. Forex money, you spend it well. Yes.
That was very well.
Sir, money day. If money day, you go do am. Sir, yes. Yes. Yeah, it's over $1 billion. Yesterday, I'm trying to look for that account. Yeah, he was showing me. Yesterday, he doubled 200 to 200. You see, one thing about this thing is that when you get to a particular point, anxiety is over because the fund is there, plenty. Yes, the fear has disappeared. Unlike when you have $500, but that $500 is all that you have. When you enter the trade, when the trade give you like $20 profit, you just remember that you have not paid school fees. And you remember that this $20 can quickly pay half of it. You close it. So anxiety has entered it. Meanwhile, that $20, that trade can still go up and give you 100, 150 more. But because year is clouded with so much of responsibility, you cut the opportunity short. So as he is now, he's nothing to lose. There is enough to put again. And then over time, he has built a system that is repeatable. One of the things you must also note is this. Anything that is working for you, stick to it, don't change it. In this game, anything that is working, don't change it, stick to it. Let anybody be telling you about any strategy, don't even listen. No matter how, that's why Jasmine Sen still uses trend line and moving average. Only, despite all the new developments, new technique, new strategy, this is what has built an empire for him. So it's still working. Why should I change it? That's the idea. So the guy has built a system that is working, that is repeatable. So if you do it once, it fails. He knows if you do it the second time, it will work. And that's when it works. It covers up for the one that failed times 4, times 5. He said I should come to Abuja, he show me. The last time I was there, he was trying to show me. I didn't understand. I was trying to practice it. It didn't work. So I said I will come again. So you will, when you build that structure and it is repeatable, that means it is working. It is working. Just stick with it. If it is early in the morning, you can trade and you are making profit. Just stick to it. If it is in the middle of the night, you wake up, you trade, and your trade out of 5 days in the week, you trade 3 times, work out of 5. That tells you that night favors you. Most of my big chunk of profits comes in the middle of the night when I set the trade and go and sleep. Not when I'm awake. When I'm awake, my target used to be lower. And not because of anything, but because of so many responsibilities. But that night one, once I set it, I sleep. I only wake up to see the result, whether it has gone my way or it has gone against me. But I used to make the target to be wide. I may be using 1% to chase 8%. So if it fails, I am very, very satisfied and fulfilled. Because if it works, it's 8 times, 7 times. If you notice, sir, the copy trading, most of the profit comes in the night. So I have discovered that that's how it works for me. So anything I do in the day is just coffee powder, coffee shady, coffee. But the main business is in the night. That's how it has worked over time. So you must also discover how it works. So going back to risk management, as you are starting now, your risk should not be more than 2% per trade. Per trade, not per day. Per trade. It should not be more than 2% per trade. Now that you are just starting. Later on, you can now begin to weigh your risk based on your resources and capital. Per trade, not more than 2%. That means in a day, you may be executing like 3 to 4, 5 trades in a day. So that means, let's say you have $100. You are starting with $100, which is about 150,000 around. So $100, you are saying, okay, I'm trading 5 times a day. So if I'm using 2%, that means per trade, I am risking $2. If I'm trading 5 times, I am risking $10. That means in a day, it will be $10. So let's say you lose all the 5 trades. Just 10 out of 100. 90. What happens? There's still confidence and morale to trade the second day. The second day, your first 3 trades can recover and double the profits. Yes, that's what after this now. That's why we'll go to lot sizing and what are they calling it? Pip count. Yes, how to set it. So if you lose $10 out of 100 and 90 is still remaining, your morale is still there. Confidence is still there. Fear is yet to enter and set in. That's where risk management is powerful. It helps your mental capital and emotional capital. Before financial capital, those two comes first, mental capital and emotional capital. You have to be stable to place the next trade. Yes, mentally and emotionally to place the next trade. You have to be very stable. So risk management helps you remain in a long time. you remain. You become an active participant for a very long time. Okay. Did you remember we talked about FOMC yesterday? Did you check the market? You didn't see what happened during that 8 o'clock. Heavy movement in the market. Is there any news today? Gospel, let me check. From 8 upward. Yeah, I waited for the market to cool down to get a clear direction. Then I went with it. So when I now came out, then I was expecting to pull back again so that I can enter. That was when my friend disappointed me. My friend just kept on going. He didn't look back. Yeah, I was asking him that something is sent, he has deleted it. He said, my figures, they always bring issues. I don't come out them. Because people will find it difficult to believe. But I know it's true. Yeah, of course, I know it's true. He shows me withdrawal. I posted it yesterday and deleted immediately. So a very humble guy. You see, you will never know he's doing some crazy things. Okay, so let's now look at lot size and pip count. Please let me show me charts. So that cell has changed. That cell is no longer valid. You see that cell that was coming before. So gold has returned back to the prevailing. It's returning back to the prevailing trend, which is a bullish trend. So buying now is more safer because the trend has been uptrend. Buying now is more safer. That sell was just a distraction. And even if you look at the sell that came here, if you look at it holistically, it was a ranging. It was ranging. It wasn't a trend. Okay, he has personally sent it to me. See, he deposited 194,000. He made 208,000. He withdrew 200,000. 28th of January. Yesterday. 194,000 deposit. Profit 208,000. Withdraw 200,000. Look at it here. 28th of January. See, the date is always there. Up there. Yesterday. Now his own style is that 100 or nothing. Or nothing. For any trade is entering. 100% or nothing. He might not be risking everything, but he's putting the 200 as a buffer. There is a setup is always looking for. Once the thing doesn't move straight, he start cutting the losses. So let's say at the end of the day, he might be cutting out 75,000 as loss. Then he try again. So that 200,000 may be like you want to use it like 4 times, 3 or 4 times. Yes. So it is 100 or nothing per trade. That's what he told me. Therefore, every trade it is 100 or nothing. So show off gone. What brought him there was as a result that he has been able to accumulate more capital. So no more anxiety, no more pressure, no too much of responsibility. That's why simplicity is always good. Nobody will notice you. Nobody will know that something is happening around you. Somebody called me a few weeks ago, and he was saying, Pastor, what happened to you? I said, it is well, oh. God will continue to help us. Say, don't worry, you will. Amen. God will continue to help. If God puts any help on your heart to help us, please help us. The Bible says that the poor man who is behaving as if he is richness, and the rich man who is behaving as a poor man, it is wisdom. So even when you are not yet there, doing as if you are there, people will use pressure to kill you. And even if you are not yet there, but you are in the process of getting there, nobody will notice. So the pressure will not be there. People will look at you and say, meanwhile, you are building, no pressure. It's wisdom. So now, in the case of gold now, what are we supposed to do? We are waiting for a bullish structure to form. This one has been taken out. Then we are waiting for it to go higher, form a pullback. Then we will look for our key level somewhere here. It's resting on the key level, then you are taking it higher. So patience is required. Patience is very required. Or you allow it to return back here. You allow it to return back here. You take it. This area, they are all key level area, including this moving average that is here. It can come and be standing as your support here. It's so interesting that you will see that 75% of the time, when price comes around this moving average, they bounce. They react, they respond. You will get decent 100 to 200 pips move. Most of the time. So if you wait for price here, you put buy limit here, and then you put stop loss just a little bit below it, let's say 75 points or 100 pips. By the time you get here, you first do 200 pips of profit. Even if it's going to break it, you will have gotten decent profits. Study this thing. You will understand some little gimmicks there. And then it can also bounce on it and ride it up and never return again until next year. It will never come to this zone again. So those areas are very significant. This area, very significant. I have noticed that price always, most of the time, respond, particularly when there is a moving average there. That's a confluence. So if this price comes here, is a buying point for me. Let me mark it. Yeah. That area is a key area. If he misses this area, then I'm coming here. That resistance term becomes support. A delay. This is 15 minutes. It doesn't take time. If it is on a higher time frame, exactly, that zone. It's another very key zone for me. So price either comes here, I take it. That is marking those key zones. The truth of the matter is that before price even collapse to this point, you have made some profit here. Yes. Most of the time, 85%, 90% of the time, when price get to that key zone, it always rejects. It is higher momentum that breaks it later. It always rejects. Where's that FOMC of last night? Where is it? This is it here now. Abi? Look at this, that's the FOMC. This is the FOMC. Let's go to 1 hour. Let's see. 1 hour. After the release of that news, he left the interest rate flat. He didn't increase it, Jerome. He didn't increase it, he didn't reduce it. And from there, that move was more than 1,000. Just let me calculate that pips. From 5,319 to 5,000, that's almost 2,000 pips. If you put $10 there, that's like $10. That's like $200. Yes. So now let me show us how we calculate, how you can put in your money, how you do the calculation. So we use what we call PIP. PIP. PIP means point in price. Point in price. That means we are using points to calculate price. For example, this is 5,538. This is how we use the PIP count. 5,538.92. You know, it keeps moving from 5,539.23. It moves to 5,038.39. 5,540. So that is 1 point. 5,539, 1 point. 5,540, 1 point. 5,541, 1 point. So that is point in price. This is the price, but we are using points. So this is the price of gold. Go to GBP USD or Euro USD. Now look at, you see 1.38200. This is the price. Now the movement of this price, we calculate it per point. For example, as it's moving now from 1.3937975. If it moves to 1.37988, that is 1 point. You see now? Look at it. It's moving. Before you know it, now it will move again. 89 or 87. If we go back to 89 or 87, then 800, like that. So that movement is in points. 82. It dropped from 88 to 82. It has done like a 6 points reduction. So that is the point we are counting. That is how you begin to come into how much you are going to be using for trading. Now, this is how it is being calculated. For currency pairs, because the prices are different, for currency pairs, the last number is 1 pip. $1.38200. Now look at, there are 5 digit number here. You see this last one, remove it, it's not important. It's like 0.1 pip. Leave that one out. This one here, the 4th one after the 5th one, is 1 pip. The second one is 10 pip. Let's pay attention, we'll get it. The next one is 100 pip. This one is 1,000 pip. Now, what does that mean here? Let's pay attention. If price moves from 1.8013 to 1.8023, that is 1 pip movement. From 1.38, let's use this figure I put here. If it moves from 1.38200 to 1.38210, that's 1 pip movement. If we move to 1.38220, that's 2 pip. If we move to 1.38320, that is 12 pips. Because this one is 10. This one, 10. Oh my, am I worried? I'm a good teacher. Oh yeah. If it moves from 1.38200 to 1.38300 is 10 pip, because this one is 0.1 pip. This one, 1 pip. This one is 10 pip. This one is 100 pip. This one is 1,000 pip. So if it moves from 1.38300 to 1.39300 is 100 pip. Are you getting it now? If it moves from 1.38300 to 1.39, if it is this one that changes, that's 100 pip. 10, 1. But 100 people is not a small journey. 100 people is a very big journey. Yes, that one. 1 week. It might be 1 week. Are we getting it now? If it moves from 1.38300 to 1.7300, it's still 100 pip, but minus 100. Yes. So 1.38310, 1 pip. 1.38320, 2 pips. Like that, 3 pips, 4 pips. So it keep changing, it keep changing, it keep changing, it keep changing. Once it completes those 1 pip, this one keep moving till 9. This, it will change and it keep going up. It will move to 4. This one will become 40. That's 10 pips. So it keep moving again. Oh, once it get to 9, it increases to 50. That's another 10, additional 10 pips, making 20. Are you getting it, sir, or not yet? Oshikudia. Oshikudia, sir. Oshikudia, bi. It's very simple. A change in price from one figure to the next figure is in pip count. And this thing, as it is now, 1.38300. If it moves from 1.38301, it is 0.1 pip. This last one. That's why I said forget about this last one. No, not minus. That fourth one is insignificant because it is 0.1, 0.2, 0.3. Even on the chart, it's always moving with speed. So the real pip count starts from this one. That's on currency pairs. 1 pip. So if it moves from 1.3830 to 1.3831, that's 1 pip movement. Do you understand that, sir? If you move from 1.381 to 1.382, that's another 1 pip movement. So when it moves to 9, that's 9 pip. Then this 3 now change to 4. You know this one will become 0. That's 10 pip. And they keep going like that. This one becomes 9. Come to this one, 100 pips. That's how we calculate the pip count. So when you want to trade, the first thing you are looking at is how many pip, where my stop loss will be, how many pip is it? So you just minus your entry, the figure entry, minus where you want your stop loss to be. You do the difference. Whatever the difference you get, we give you an idea of how many pips. Give me chart. Give me chart. So now, let's say I am entering. Can you open it? You have a demo account now. Open it. That XNES demo that I used to see on that. Open the demo account. Okay. Now this is a demo account. So we can actually pick a trade from here. Now, this is, no, let's go back to GBP USD, then I'll now use gold because the pip count is not the same. GBP USD. Control G, remove the grid. Aha. So now, I want to buy. I want to buy here. And my stop loss will be okay. My stop loss is at 1.3770. That's where my stop loss will be. And I want to buy here where it is now. So I want to know the number of pips from here to here. So I just minus 1.3799 minus 1.3777. So once I have that idea, how many points is there? 25 points. That's 25 pip. That's 25 pip. That point, now because of that last 0, we remove that 6. That's 25 pips. From here to here, 25 pips. So now, this is how I will now get my lot size. Now, in lot size, there's what we call standard lot. Standard lot size is 1. Lot size 1. We have mini lot size is 0.1. Then we have micro is 0.01. Lot size is what you use in trading, and you calculate your lot size based on your capital and based on the calculation you are factoring in your trade. So now this is how to use your lot size. Lot size 1. For lot size 1, 100 pip movement is $1,000. You need to write it so that you can remember. 100 pip movement is $1,000. Lot, the standard lot size 1. Lot, yes, LOT. Standard lot size 1. 100 pip is 1,000. Yes. 100 pip, 1,000. Equals $1,000. Okay. Now, 10 pip is $100. Still on lot size 1. Oh. 10 pip is $100. 1 pip is $10. $1,000. 10 pip is $100. Let's forget about this. Let's pay attention to how to use the lot size. 100 pip, $1,000. That means if I trade with lot size 1, and the lot size 1 travels 100 pip, it brings $1,000 or take $1,000 from me for 100 pip. If that movement was 10 pips, it brings $100 or takes $100 for standard lot size 1. If it goes just 1 pip, it brings $10 or remove $10. That's standard lot size 1. So now let's now go down to the mini lot size. For the mini lot size, which is 0.10, yes, 0.10. 100 pip is $100. 100 pips is $100. $10 pip is $10. $10. Then 1 pip is $1. So what that means is that if I use is 0.1 to trade. If it goes 100 pip, either against or for me, it brings $100 or take $100. Which of the lot size is higher? Standard. Ogbonogo. About Dubai is a trade. Work on my pump me. Benny.
And the style of trading the commodity.
You know, it's the same. It's the same lot size. Only that the pip count is different because of the way the way it is arranged. We'll talk about that one. But the lot size is the same. The application is the same. So now the last one, which is micro, 0.01. 100 pip of that one is $10. 100 pip is $10. 10 pip is $1. 10 pip is $1. Then 1 pip is 10 cents. Cents. Go to $1. It's not. Then very small. So now, let's say, bring that chart again, Gospel, please. Sorry. So now, based on this calculation now, remember, we calculated my trade here. My stop loss plus my entry is 25 pips. And I have an account of $1,000. And I don't want to risk, I want to risk just $100 to trade. And I have 25 pips. That means if it goes 25 pips, I want to come out of this trade. But it is $100 I want to risk. So how do I do my calculation? Which of the lot size am I going to use? If I use lot size 1, 25 pips will give me how much? Yes. Look at the calculation. For lot size 1, 10 pips is 100. So if I use lot size 1, $250, ó ti kọjá owó tí mo fẹ́ risk. So I can't use lot size 1. Sir, do you understand, sir? Sir, do you understand it to that point? If I say I want to use lot size 1 to trigger this trade, 25 pips will minus $250 from my account, and I'm not ready to lose that. I want to use 100. Yes, $100, and from 25 pips. So I will now look for the lot size I'm going to use that will perfectly fit in. Let's come back to mini lot size. If I use 0.10, 10 pips is how much? $10. 25 pips will be how much? $25. That means 0.1 is smaller. So what am I going to use? I divide 25, 15 minutes, 5 minutes. So let's go to 15 minutes. These things are very important. Even in time frame, wow. Gospel. Where's the time frame? I've forgotten how to use this thing. Okay, right click. Time frame, see there. 15. Sorry. Aha. Now, on a lower time frame, can we see anything here? On a higher time frame, the prevailing trend is bullish. But right now, it's doing something we don't understand. So we have to wait. But here now, what can we see? It's not looking like anything significant. Higher high, but see, this is equal high here. So we can't see anything apart from this low that is lower than this low. So if I thought we are looking for anything here, is to look for a sell. So the sell now will be somewhere around here. You sell back to this level. Could you bear no low, sir? I'm telling you, it's just to understand the structure. So you see a trader who will come and say, oh, we are selling here. You will begin to wonder how. What he has just looked at is the structure. Because the structure is saying equal high, lower low. This low is lower than this. So we are waiting for a pullback somewhere at this region. And it may say because there are these equal lows here, I will sell around this area. Let me mark it. Let me put it at that equal high. I've already bring it out here. Just aha. Extend it very well. Aha. Exactly. Thank you. So if we say, I will wait for price to get here and then sell. Or I will wait for a breakout of this region since the prevailing trend is bullish on 1 hour. I can wait for a breakout here. Let me continue with the buy. But I can also say, let me sell here. Perhaps. But what will determine whether I will sell or it will break out is when price gets here, what is it telling me? We must see that bullish rejection candle. Sorry, I said bullish, I'm sorry. Bearish rejection candle coming there. You will understand this thing better when you start practicing. So right now, there is no trade on Euro USD. No trade. No trade. Yeah, this demo account. But it's the same live. It's the same live. What is happening in live? That is the same live price action. What's that? Okay, this one, Abi. Don't mind this, what it's doing now. One candlestick does not determine what you should do in the market. You have to look at the entire structure. So this is our sell zone. Or a breakout. A breakout, it retest it, and then we buy. So if you are going to mark any area here now, right now, see where you mark. Should in case it sell, take profit should be here. Should in case it and retest, see your take profit here. Test, yes, it will test. You have to allow it to test that zone. You buy and put your stop loss below. If you are going to sell here, you sell here and put your stop loss above. If it breaks it and return, you re-enter. If you miss the first one, you get the second one. Or you get the first one straight away. That's how trade is. Yes.
Breaks out.
Let's say you enter, it breaks and return. Because if it breaks, it's likely it's going to stop you out. And then return, you now re-enter. See your take profit. Now look at what you are losing. Look at the size of what we are losing. But look at this gaining back. That's why I said yesterday, never be afraid of taking trade. Provided you are trading structurally. If you are trading all right, sir. If you are trading structurally, don't be afraid. Price will always give you what you want. It will come. See, it's like you are setting a trap for it. It's like you are saying, this is my territory. If it comes to my territory, I am in control. Right now, why I say we can't trade now is because this is a no man's zone. It's a no man's zone. He can decide to reverse from here. So if he gets here, we can try a buy. Since the prevailing trend is buy. If it comes here, we can try a buy. So you have to always allow price come and meet you in your zone. Even if your zone is wrong, let price come and meet you there. Mark it, even if it is wrong marking. Let's say you mark something that is not correct. Still allow price come there. Don't trade in between. I'm not seeing anything here, so there's nothing to trade here. But somebody else can be seeing something, and he marks it as his own zone. Me, I'm not seeing anything. So I wait for price to do something here, or wait for price to come here and do something. God's when we mark this zone. Insert. Look at it up there. No, object. Rectangle. Shape. From here to here. No, too much now. Yes. Let it rest below. Thank you. These are my two zones of trading Euro USD. Be marking something else. Sir, a buy here, sell here, it's out, test a buy.
Comes back.
From here. So buying zone, selling zone. A breakout, buying zone. If I sell here, it breaks, do a fake breakout just like it did here, and then return, I resell. If we now break it again and went up, I buy. Yes, so the third time I must get back those two missing. However, what will keep you doing that is risk management. You are always having something left. Not that you are going all in at one trade. At least give room for 3 trades. You go the first one, they kick you out. Go, provided it is your zone. If it is that your zone, keep the trade there. It will move. So let's go back to lot sizing. So let's say, for example, I want to buy. I'm buying here right now. Oh yeah, gospel, let's calculate the lot size. I'm buying where it is now. 1.19618. And my stop loss is below where it started rejecting from here. That's where my stop. I'm just giving an example. So, okay, he has bought is 0.02. Where's our stop loss? So he has put stop loss here. Look at 25 pips. It's 0.2 $50 loss. TP. Where is it? Put it TP here. How much? Put it at $100. 51. Let's say okay, 50 pips. So if the trade does not work and it comes here, it takes $50 from my money. But if it works, it gives me $100.
That means what you
Yes, sir.
like to
Yes. Yes, sir. Yes, sir. So to make this thing easier, let me make it easier for us. Let me make it. I just thought of, okay, let me make it. Let me think of how I can make it easier. Just do it this way. Because the calculation is already making the calculation, but I just thought of how we can make it easier. See it here. See it here. See it here. $100 is 0.01. Low risk is 0.10. Mid risk, one lot size, high risk. Because if the trade move $100 against you, the money is gone. So if you have $100, maintain 0.01. Low risk. So if you have $200, 0.02. Low risk. 0.20. Mid risk. 2. High risk. In fact, continue to use 0.01 until you get to $500. Because the more the money increases, the more safe you become. Gets to 0.5, when the money gets to $500, you can increase to 0.2. 0.2. 100 pips of 0.2 is $200. Sorry, it's 0.02. 0.02. 100 pips is $20. $10 pips, $2. So that's how you just manage your risk. This is better. So it doesn't matter where your stop loss is going to be or your take profit is. If your money is $100, use 0.01. If your money is $200, use 0.01. If your money is still $300, use 0.01. Then when you get to 500, 0.02. That is tired. Sorry. Okay, so finally, lot size everyone share because the lot size is the money. So that's where the main work is. And you see, it's going to see profit. Where's the profit? Why is it not showing us profit? Is it because it is the demo? Okay, the profit should be showing here now. Show us that something. That's how trading is, so, and you can decide to reverse, even from here. But you are at liberty to close it like this or to leave it. Look at the trade. It's on profit now, $6. Yes, so you can decide to leave it until you reach your TP. That's just, like I said, trading is 50-50. You close it. Look at, it's already reversing. So if you have closed on $7 now, you have made money. And now it's reversing. Those are some of the psychology in trading. So that's why you just have to maintain a discipline. Leave it or you close it. But leaving it is better. So what he did now is to set break even. He has moved the stop loss to where the entry is. So even if the price reverses, it will close this trade on a zero. That's, you are floating at zero risk. You can do all of these things on your laptop. You just move it. You can even do it on the phone. You just move it. Move it to the entry. These are some other minor things that you'll be learning later on. So finally, let's talk about Forex business. Yes. In the Forex industry, there are two ways to make money. The reason why I'm introducing this to whenever I'm training people is because not everybody will be able to scale with trading. And some people could be doing better in the business than in the trading itself. So let me expose us to Forex business. In Forex industry, there are two ways to make money. Either as a trader or you are in the business aspect of trading, business aspect of Forex. So if you are a trader, you solely depend on making money from trading. But if you are into Forex business, you don't have to trade to make money. Okay, so in Forex industry, there are two ways to make money. Either as a trader. So you either make money trading or you make money from the business side of it. And there are vast ways to make money from Forex, from the Forex industry without trading. And one of it is education. So like what I'm doing now, like the business side, like what I'm doing, I'm providing education. So you can actually learn these things I'm doing and then you teach people. You don't have to trade. And then you charge 300,000, 400,000, half a million per student. So if you are able to train people, 4 people in a month, and you are charging them 250,000, that's 1 million naira. So you just organize 1 week training. 4, 5, 6 people will give you millions. That's one way. The thing is still going. We don't make money on $12. That's like 20K. Money for weekend. Then the second one is through partnership. Gospel, please come. Open my Xness. Let's go to Xness partner. Through partnership. That means you partner with a broker. You become an introducing broker. So what you do is that you help the broker, you promote the broker by looking out for traders, those who are trading, either those you train or those who are already trading. You tell them about this broker that is good, tell them the service of the broker. Then when the people are interested in signing up with that broker, you give them your link. The broker will give you a partnership code, a partnership link that you will give to people. So when they sign up, whenever they trade, you make money. Let me shock you. Let me shock you with something. Where's it? No, go down. It should be down. No, come here. This one. Yes. Partnership. Let me shock you something. Let me shock you with something. See, this money, I made it without trading, just by being a partner to Xness. This is $207,999. $207,999. Total profit. Today alone, I have made $134. I didn't trade. People are trading using my partnership code. So people are introduced to Xness who are trading, just like you now. you must trade with Xness. If you still want me to continue to guide you and provide mentorship, you must. So while they are trading, Xness give me commission without them knowing. Anytime they click on buy or sell, whether they make profit or not, Xness give me percentage. In total, $207,999. And apart from that, I've enjoyed some benefit from them. $500 cash, smartwatch, iPhone, high-end electronics. These ones I've gotten them all. Luxury city break for 2. This is where I am now. Luxury international trip for 2. So I've gotten 2 targets, remaining 1. It will come by itself. I don't have to do anything. I'm not pursuing anything. It will come by itself. This padlock will unlock very soon. Then after that, luxury watch. Then after that, $40,000 cash. Luxury sports car. $300,000 cash. Just by introducing people. And say, use this platform to trade. And Xness is a good broker to use. Because their withdrawal is instant. Their deposit is instant. That's what me I like. Any other thing, it no concern me. You have been using it now. Once you click withdraw, before you finish leaving that place, the money is in your bank. They really capitalize on that. They invested so much in that to beat out other brokers because they have a lot of competitors. So they use that instant transaction. Bybit. No, Bybit is just a wallet. It's a crypto wallet. Yeah. It's also a broker too, but kind of more of crypto. Yeah. More of crypto. So you become a partner. You get a partnership code. Anytime you introduce a trader to them, the trader start trading on your platform, you make money. So one of the ways you can even combine the two, you can get traffic for the partnership. You train people, you introduce them to the broker, just as I've introduced you to Xness. So once you introduce them to Xness, whenever they trade, you make money. Another one is through Signal provision. Signal. Now, this one will mean that you are trading or you are analyzing markets. So you are providing signal to traders. What that means is that your signal has to be good. So if people use your signal and they make profits, you become reliable. So they will be waiting for your signal. Instead of them analyzing the market, they will not analyze. They will wait for your own signal. So you now know they will pay for subscription. So when you are providing signal, you don't have to be a trader, you are just an analyst. So when you give them signal, your signal works, every month they are subscribing. $100, $50, depending on how you want to do it. Or you give them the signal free, but they are trading that signal on your partnership. So the money is still coming back to you. That's another way. Another way to make money without trading is through the copy trading, social trading, which you are already doing. You don't have to trade. Only that the person who is trading the account has to be reliable. If it's making profit, you make profits. Then there's another much more deeper way. You see that same copy trading that you are doing. If you want to introduce somebody, instead of you sending them my link, you open a partnership code. So let's say there's somebody, oh boy, there's something where they enjoy you. In that latest language. So you better come join. So you're supposed to have been making money. You use his code now. You use your code. You are supposed to have been making some little token. Let's check.
It's different from what I
Yeah, different from normal trading profit. Except withdraw it without knowing. Yes.
I would take money.
Let me confirm it. So that's another way. So when you bring people to this, when you bring people to the social trading platform through your own special link, whenever the trade activity goes on in the person's account, you make money. No, this is not where. Let's go to xnet.com. You now sign in.
Just like you are reopening it on
Sir?
just like
You want to log in to your portal, yes, xnet.com. So I will send you my link now. You open, yes, you open so that you can open the demo account. And then you start using it. You start using it to practice. xnet.com. Let's enter the. Okay, sign in. Sign in pẹ̀lú email yín. Okay, so mo send in link here. So once you click on it on WhatsApp, you will now sign up. Ẹ gbàgbé password. But you did another one that day and you wrote it down somewhere. Yes. I didn't even ask Toby. She joined last night. Her money go down plenty. Oh. Sir? Okay. Okay, you now register. Kò ṣáà ń ṣe pé ẹ l'account méjì ṣá. Aha, you get $2.6. Can you see, without doing anything, see where the money comes from? You see, they will show you. See, partner wallet. He introduced him, and he's already making money from him. So let's now imagine that you have 20 of them.
I just my girls that I bring.
Yes, sir.
My children.
Yes, sir. So instead of bringing them, I give them my link. You give them your own link. That same link you gave him that day. This is how to get the link. Let me use my. Let me use SNES products partnership. So one of the ways you can start getting capital for trading is let people onboard people, let them start doing the copy trading. You'll be making money. The capital, whatever you get from there, you can now start using it to build your own portfolio too. Very simple, it's wisdom. If you withdraw it now.
I saw you withdraw something there too. I want to.
This is your link. Share.
Wait,
This will
how do I get the link?
share it to yourself on WhatsApp. Then from there, you can begin to. So open the. Okay. So you sign up first. You need to verify the account with NIN or international passport. Any of those ID card. NIN. So once you verify the account will now be active. If not, for a demo, anyone. Yes, in fact, I don't think you need verification for demo, but to go live, you must verify it. They will not allow you to make any transaction with it. No, not here. Not here. Emma War, can it directly? Xness portal, xness.com. So hello sign in. Ele copy trading lele. Hello see Chrome. So now this morning, Xness minimum withdrawal is $3. So to about $3, so you can remove it.
I have to bring them.
Mombasa.
I have to bring them, or I should maybe to have to.
Yes, it's just this your link now that you copied. Let me come and sign up. Once they click on register, it's already logged. So they will sign up, put their name and profile, open the account, verify it, submit NIN and co. Anybody can do that one, just to follow the instructions. But if I need anything, you can call me. You let them. So once we pass that phase, we now give them the copy trading link so that they can enter the copy trading portal. So the moment the trade starts working for them, the money starts coming. Yes, sir. So xness.com. Xness. Ocean load. Will the network? Will the network or? Yeah. Are we still live? Let's live life. Is anybody there?